Okay, let me now welcome on board Shankar Banerjee, the CEO at Dr. Lal PathLabs, to talk about how their quarterly performance has been like. Shankar, great to have you on the show and congratulations on the good set of numbers. This is indeed your best quarterly revenue growth in about 4 years. Walk us through what came together this quarter to produce that number.
So this has been a work in progress for the last 2 years, for us to really get these growth numbers. There's been a considered effort in terms of improving our network. The number of labs we added over the last 2 years, about 30 of them, and we also added close to 2,000 collection centers. On also the focus we brought back into the specialty side of our business, and our reach, which we are expanding into the smaller towns, mostly into tier 3, tier 2, 4 towns also continue. So a lot of these factors have come together, and also there's been a tailwind this quarter in terms of the benefit we are seeing due to the CGHS price increase.
You mentioned CGHS and ECHS as well in terms of price revisions. They're now flowing through, adding roughly 2 to 3% at the company level for the next couple of quarters. Are you expecting to see some normalization at the margin level once the tailwind fades? What replaces it as the next margin lever?
So this quarter, the margin has been better than expected, and primarily, the flow through that we see of the CGHS, ECHS has been a contributor. But there is a lot of other work that is going on in terms of the way we are managing our operations, is also a contributor to these margins. So going forward, we have always said that we believe in having a margin profile which is in the range of 28-29%, uh, and reinvest other anything else back into growth. Also, this is just first quarter, so we need to watch and see how the business performs over Q2 for us to really take a final view on how things are going to go for the year.
Right. On costs, though, with the Middle East conflict having stretched out thus far and broader raw material inflation as well playing out, are you now seeing any impact on costs? And can you quantify this for us?
So as of now, we've been able to hold on to the raw material cost. But yes, if this kind of keeps stretching further, there could be some impact, or specifically on consumables, which has oil derivatives in the manufacturing process. Our bigger concern would be on the forex exchange rate, because most of our raw materials, consumable, are kind of reagents and kits get imported. So that could be a bigger concern. But as of now, that's holding steady, and we have stock cover. So as of now, we don't see a huge reason to kind of worry on that side. But yeah, if this continues even longer, then we may have to look at what could be possible impact. But having said that, what I've always maintained that it's been more than 3 years that we've taken a price increase on the organic side. So if we see any substantial cost pressure, we have the ability to really also pass it on through a price increase.
Right. And on pricing, you've said that there's no hike plan for the first half and that you're not banking on competitive intensity easing. Realistically, how much room do you have to take price hikes later this year without giving up volume share?
So the last price increase that we took was more than 3 years back. So within that time frame, we have observed that there are some other competitors who've taken some price increases. So to that extent, we definitely have ability to take price increase. I mean, the quantum or the timing is something that we will have to work out. As of now, given the position that we have and some of the benefits that are flowing in due to the CGHS price increase, we don't see the need to take a price increase in the near future. So definitely not in the first half. I think post that we will review. I think the quantum and the timing is something that we will review post the first half of the year.
Right. Mr. Banerjee, genomics has been flagged as a strategic priority for a few years now, but it's still under 5% of your revenues. Are you facing a bottleneck in adoption here? And what's the timeline for this to pick up?
So I don't think we are, giving out our genomics specific numbers. But having said that, when we say genomics is a focus area, one has to look at the way the business is for Lal PathLabs is very broad based. And genomics is a focus area because a lot of the cancer driven testing or which is and even newer evolving tests are related to genomics. So we want to be a leading player in that area. But as we get into that market, or as we are a part of that market, that doesn't necessarily mean that that's the only test profile that we get. So when we are, talking to clinicians or institutions, if we get the genomics testing through them, or the whole range of other tests also come through with it. So it is not necessarily that the contribution will shoot up significantly because we are not only a genomics focused company. I think we are quite much more broad based. So genomics helps us to really drive the full portfolio forward. So that's how the strategy really is designed within Lal PathLabs.
Right. Mr. Banerjee, you're sitting on close to about 1,700 crore rupees in cash and have flagged interest in a larger asset in a given city for M&A as well. Shed some light on this investment. What city? What's the tier that we're talking about? And what is the asset size?
So we've been saying that, if we look at our geographic spread within India, we are relatively weaker in most of the markets in South and Gujarat as a state. So we are right now looking at possibilities if we can get a reasonably sized opportunity in any of these markets. In the new market entry, typically we would like to start with a metro or a tier one town because that's where the medical opportunity and the cluster core lies. So that would be the idea. So that's something which is still work in progress, and we continue to look for reasonably sized opportunities in these geographies.
Right. And you've increased your CapEx guidance for the full year from 120 odd crore rupees to now 140 to 150. What will be the CapEx put towards?
So there are normal maintenance capex that we do over and above that, new labs that we set up. We also plan to set up a few, high-end radiology centers, expand that more in Delhi NCR, a few more there. We are also trying to see, in a few of the tier two markets in the north part of the country where we will try and put high-end radiology to see how that works organically for us. Over and above that, there is this new high-end super specialized lab that we are setting up, and that would also need capex. So that's primarily how the capex would get utilized.
Right, Mr. Banerjee, great to have you today on the show. Thank you so much for highlighting what really the earnings gone by were and what's the quarter ahead going to look like. 2.5% higher for Dr. Lal as we speak right now.